Well, here we go. I've got a Sunday video for you guys, and it's a video that a lot of you guys have been requested in the comment section. So it was a bit of peer pressure from you guys that made me do this video on Sunday. So I hope you enjoy it. Hit the like button. If you're new around here, subscribe. And we're going to be talking about what stock you guys have been asking for, which is me to talk about National Express after their earnings this week. So we'll go through this and see what my thoughts are. Now, I'm going to keep it nice and brief because I wasn't going to do a video on this. The reason why is because I have covered it on the Patreon. On the Patreon, we do an earnings review. We look at the companies that reported earnings from last week, so the likes of Hims, Celsius, Flutter, National Express, and I already covered it on there, but because there's so much demand, I thought, as well as that, I'll just speak about it for a few minutes on here, but the more deeper dive will have been on the earnings review on Patreon. So if you do want to check that out, links in the description. And also, if you do want to get a free share worth up to £100, join Trading 212. That's personally for me the investing platform that I use, and it's a pretty good deal that's going on at the moment. But let's get stuck onto what you guys asked for, which is a National Express quick recap of earnings. So you guys might know, or you might not know, depends how long you've been watching the channel. If you've been watching the channel longer than 2 years, you'll know this. If you're new, you won't know this. I have been a shareholder for National Express for about 2 years now, coming up to 3 years, I believe, actually. I had to quickly think about it in my head. Yeah, coming up to 3 years I've held this stock now, which is crazy. So I originally bought this in the CV times. I thought this was a really good opportunity. Bought it on the dip, it went up a little bit, and then, as you probably know, this time here and this time here were when it got down to that £1.19, £1.20, that sort of range. That was when peak fear of, like, first of all, oh, this is really bad, and then the second time was like, oh, you know, everything started kind of opening up, and then people realised National Express is a company that's going to really struggle because people aren't going to be able to travel and use their coaches, and also the capacity of the coaches, you know, you had to social distance, so they were never going to get back to like 100% capacity because you had to have so many empty spaces on the buses and how you sit next to people and everything like that. The people realised this is going to be a long time for National Express to recover. Vaccine news came out, the stock went absolutely crazy, and you're thinking, okay, now everything's starting to show the signs of recovery. And personally for me, at this point, I was actually up over 100% on National Express in this time frame. In 2021, I was up over 100% in this position. At that point, I was actually, my target price for National Express was around that £3 range, but I thought I'll also get a pretty decent dividend yield in the future, so I sold off some of my position and held the rest of the stock. Unknown to me that 100% return would then go back to break even in 2022, 2023. Absolutely crazy. Never thought it would go back down to these levels because these levels were peak fear in the CV, where people weren't travelling, bus capacities were the capacity that the buses were on or the coaches were on was so limited. I never thought we'd see the levels go back down to there, but it did. You can see here the 52-week close was exactly £1.19, and that's what we have right now. Now, at this time, I've gone back to basically break even on my position, which is absolutely crazy, and I think this has been a really good opportunity, as you've seen if you've been watching the videos in the last few months. I've been saying, I can't believe it's at this level, I'm buying again. And the earnings came out, and to be honest with you, the earnings were exactly what we expected. They were decent, but for some reason, investors were shocked and went, oh, these are really good for these prices, and the stock went up. So I think it's only finally a bit of reality coming back to National Express. Like, I think National Express I think right now National Express should be above a £2 stock. I think in the longer term, National Express should get back to a £3 stock, which obviously from these sort of levels is nearly a 3x, which is unbelievable. And I think potentially could, if you're holding it even longer term, you know, obviously I look to hold stocks for 2 to 5 years, but even if you start getting towards a longer term, like 10 years, you could be talking even more, which is crazy, and that's not factoring dividend yields as well, which we'll actually speak about very quickly in a second. But yeah, absolutely crazy there. So yeah, I had a good pop off earnings, as you can see here. So I'm about break even on this position. It was up 17% this week, and I think it's only a matter of time before we actually get back to the valuation that National Express should be valued at. Earnings were solid. Obviously, there was a massive jump in the operating profit. The actual profit, if you actually look at the profit that it made at the end of the year, it was actually negative because of an expense that they had to take, but that doesn't matter if you actually look at the operating profit. Operating profit was up massively. Revenue was really good as well. And if we have a quick look at National Express on Simple Wall Street, which if you want to join, link is in the description. I think you get 30 or 40% off if you join through that link, as well as a 14-day free trial actually. You can see here that before the CV situation, we had a company that was doing 141 million in profit, and in revenue it was doing 2.7 billion. So if we actually have a look at the moment, you'll see here that in revenue this year we're going to get above the pre-CV levels, and profit is at 70 million or 68 million. I think they'll get above that very, very quickly. And if we can get back to the previous levels of profit and eventually work up to a 6, 7, 8, 9% profit margin, which is the target from management team, this is going to be throwing off very good revenue, very good profit, and even if we just say 100 million profit, which I think they will achieve in the next 12, 24 months, this is going to be looking very cheap on an earnings basis, and that's obviously still very cheap. That's about 8 times earnings. This is a fantastic company that should be, pay probably about 16, 17 times earnings. So, and then you factor in that potentially we could be pushing in the next 5 years towards 200 million profit, which would be insane on the valuation. So it looks very attractive. They also confirmed paying the dividend, which is currently a 3.5% dividend yield, which is lovely, but it's still actually not near where they were doing pre-CV levels, so that even has massive upside. So yeah, you can see here that even though this has had a good week, I'm still a buyer at these levels. I think these levels are still very cheap. I think that when you look at the long term, the profit they're going to generate, the revenue they're going to generate, the dividend they potentially still have is going to be good. Now, I've got to say, I knew they were going to pay the dividend. I looked at the share price, I thought that the management will react to this. In my opinion, I don't think they should have paid the dividend this time around. I think they should have paid some of the debt off in the balance sheet. Just my opinion, but I know why management did it. They looked at the share price and said, we're going to have to pay the dividend just for shareholders here. But, I wouldn't mind. It might have created the share price for another 12 months, but that would have just gave me bigger opportunities to buy more shares. I would be fine with that. But yeah, it was always going to be declared, even though I think it is the wrong decision in the short term. But hey, it is what it is. So yeah, obviously good earnings. I still think it's cheap, and yeah, I still think this should be at least £2 moving into a £3 stock. So yeah, I'll probably still be a buyer at these sort of levels. So that's National Express for you guys that wanted it. And I thought I'd just throw these 2 news stories that came out this week on the end of the video. So hopefully these are a little bit useful. Persimmon, a UK company, some of you guys might be in. Persimmon brought their results out, and they brought their results out this week, and it spooked the market a little bit. So they said here that it warns that new home sales may fall by 40% on current trends. You could go through and read the article here, but basically they said that they're seeing very weak demand at the moment, and saying the demand looks weak, but they still believe this will be the worst part of it. But the long-term fundamentals are still strong in the UK housing market. They also decided to cut the dividend as well. Now, obviously, Persimmon was always going to be a stock that had the dividend cut because it is very highly paid out to shareholders. It's one of the current ones at the moment that pays a lot of its profit out to shareholders. And top with that, I think at the moment, Google, as you can see here, is picking up their special dividend that they actually paid last year as well. So there wasn't too much shock here. A lot of these housing companies at the moment are going to start reflecting this in the dividend and just start pulling it back a little bit at the moment. But this kind of pulled down a lot of the UK housing market. A stock that I own, which is Barratt Developments, that also had a bit of a pull down after this rally that it's been on since October, November time. So yeah, obviously still, whichever company you listen to at the moment in the UK market, there's a lot of signs of weakness out there. I personally have noticed as well that if you ever have a look at what's some houses selling at the moment, a lot of them are starting to bring the value down. If you go on a lot of like Rightmove, for example, it says reduced on so and so. So the house prices are dropping. It is to be expected in this higher interest rate environment. But like Persimmon said, I think we are kind of near the peak now. I think that in the next 6 months we should see it peak out, and I think that's where we see interest rates peak out. Inflation should peak out. Starts coming down. Interest rates should start coming down in the next 6 months, and we start seeing a big catalyst in the housing market. Because the thing is that while interest rates are stalling and are stopping people taking on mortgages are slowing down, housing market's slowing down. What you're having at the moment is you're having houses coming cheaper. You have all this backlog at the moment where in the last 12 months, everyone that wants to buy a house can't buy a house because they're thinking, well, house prices are really high and then they're coming down, so that solves one issue. The second one is that interest rates start coming down, so then you have cheaper houses with cheaper interest rates, and within 6-12 months we're going to be reset on the housing market, and then we're probably going to hit the bottom, and then we're actually going to start going on a rebound in the next 6-12 months. So I think the housing market is in a good place. It's just in the short term we should see more pain. So we've seen that with the likes of Persimmon, and we've seen Barratt Developments start to flat out, and I personally wouldn't mind getting on Barratt Developments and buying some more shares. I just want it to have a little bit cheaper, and I wouldn't be too surprised if we see it have another 10% dip around into that $400 range. I don't think we'll get back down to these Liz Truss prices when Liz Truss was in, but I could easily see in the short term, a little bit more pain for the next 6-12 months, and I've got my eyes on Barrett Developments for another little bit of a drop, and I wouldn't mind nibbling some. I won't mind to buy one more time, so I'm keeping an eye on that one to buy a little bit more of these sort of ranges. So I thought I'd point that one out. And the third point is a little bit off topic, but I'm sure you don't mind. So some of you guys might not know, I started buying 2 new UK stocks, one of them being Alphawave, one of them being Darktrace. What Alphawave was to get some exposure into the semiconductor space. Darktrace was to get some exposure into the cybersecurity space, which I'm really happy I've done. So this is a stock that I've only bought in the last couple of weeks, and I'm excited for the next few years in this company. Obviously, I wanted to get some space exposure in this space because I think the cybersecurity is going to be massive in the next few years. And seeing this week, I was like, I really probably should be buying more. Like, I always get worried about Darktrace's sales and marketing and how competitive the area is. But then I looked and I thought, there's going to be that much cybersecurity attacks in the next 10 years that it doesn't really matter. There's going to be so much potential customers out there. Like every single, you name basically a company, they're going to need cybersecurity in the next few years because cybersecurity attacks are going to get bigger and bigger in the next few years. And the reason why I thought about this is this week, WH Smith had a big cybersecurity attack. And that was topped off with already what we've had this year, which was Royal Mail, which was hit by a Russian one, which obviously this whole Russia-Ukraine situation has only increased the demand for it. Obviously, they were hit by one. JD Sports, they were hit by one, which was a big one. And also, this is another one, Funky Pigeon, who was owned by WH Smith. They were hit by one and they couldn't process orders for several days. And companies don't want to be in a position where they can't process any orders. And I think there might be more consequences, serious consequences in the future for businesses if, customers' data is being leaked. So, as well as that, personally as well, this year, my current solicitors, they actually had a cybersecurity attack. So that's one in my personal life that I've seen happen in the last few weeks. And also somewhere else that I use quite regularly, they had a security attack as well, and it took their systems down for like 2 weeks. It took them a major maintenance to solve it out, and they had a few serious issues as well. So companies don't want this to be happening. They don't want to be having trust with their customers being hit. They don't want to have points where they can't process orders. And this week, in just personal events that have happened in my life, I looked at something like Darktrace, and I always viewed it as a little bit of a higher risk stock because it's such a competitive area, and because they have to spend so much on sales and marketing, there's not really a big moat around it. And then looking at it this week, I just looked at this company that I've been buying and I thought, even though there's not a massive moat around it and it is a competitive area and they're spending a lot on sales and marketing, the demand for this in the next 10 years in this space for people or companies that need to keep getting improved cybersecurity space is going to be massive. So, it's not a terrible area to, be a part of. And I thought that was a bit, me just getting a little bit more confidence in this one, where I was kind of keeping it a bit of a lower position because I thought it was a bit of a higher risk one. But looking at how much potential there is in this area in the next few years, people are going to need a company like Darktrace at the moment, and makes me more confident in this, that companies can't be affording to cut spending on cybersecurity, and gives me a lot of confidence how many clients will need it anyway. So I thought I'd just mention that point anyway. It's not really a factual point. I just wanted to point it out as something I've noticed anyway. So I hope you enjoyed the video anyway, guys. Have a great Sunday, and I'll see you in a bit.